the top line is up, revenues are up 4%. And if we look at our main activities, retail activities, they kept up well despite the major impact of the lockdown on clients, on point of sales. And if you look in particularly in June, you see the recovery taking hold. A recovery like, for example, the credit card levels back to the pre-COVID level, and so is loan demand. And then, given that we are diversified, there is CIB, and CIB is a platform that we have honed over the last couple of years and that has seen exceptional level of activities building on this strong platform. And so this basically building also on the continuous client presence and helping them in their role of raising capital for corporates, for sovereigns, and basically distributing that to investors. So that's the activities. And this, BNP Paribas, we have been able to do so on the back of our financial stability. Basically, if you look at the Common Equity Tier 1, it's further up, 12.4%, and the available liquidity reserve is over 400 billion euros. So in this context, the net income of 2.3 billion is a witness of solid results, and the ROTE of 8.7% is a tribute to that.
Now, let me ask you about provisions, because that's something that, of course, the market is very much looking at the moment. So you announced 329 million provisions for the second quarter. That's on top of the 500 million that you announced in the first quarter. So let me ask you, do you see further provisions for the rest of the year, or did you front load the provisions in the first half?
Yeah, if you look at the IFRS rules, they basically oblige you to have a forward-looking view and reflect the cost of risk in this forward-looking stance. And so in the first quarter, we took a forward-looking view on the impact of the pandemic. And we basically anticipated that the lockdown at that time, and this is the first quarter results, that the lockdown would end in April. And so we provisioned a forward-looking around that. What have we seen in the second quarter is that the lockdown lasted a bit longer. So instead of ending in April, it ended in May. And so basically that meant that the impact, the forward-looking impact of the effect is a tad higher, and that is why we provisioned this additional 300 million euros. But again, that impact has also led, on the other hand, and this is a tribute to our diversified approach, has led our corporate and institutional banking to really step up it and use the platform to really serve the sovereign and the corporates in their needs.